Hello everyone, welcome to another live stream. So let me just check if everything is working well. If my sound is performing. Okay. So, hey Slugmeister, what's up? Let me open the chat. Just trying to set things up here. So I have been streaming on the A1 channel like a half an hour ago. This is kind of a continuation of that stream. So again, if you guys have any questions, if I missed something on the stream, if you want more detailed answers, because I have more time here, so I have like 45 minutes to an hour, definitely let me know in the comment section. So the main story is, of course, the Fed. So right now, you have to ask yourself as a fundamental trader or as a trader in general, so what is the current narrative? What is currently moving the markets? As we saw, let's say for the stock market, we had the beginning of 2025. It was Trump, it was tariffs, it was crazy tweets, it was breaking news, okay? And then on Liberation Day, I think, or it was not Liberation Day, it was like a tweet from Trump, where basically he said that he was going to pause with all of the tariffs for 90 days, and that made the markets explode to the upside. So pretty much everything here was tariffs. So the narrative was tariffs. Then after that, what started is the Fed. I think somewhere around here, people started to shift from focusing on tariffs to actually focusing on what the hell is the Fed doing. Also, give me 1 second, I'm gonna turn on the AC. Okay, I'm back. It's getting a bit hot. Here in Croatia, we had like 5 days of rain and just cold weather, and now it's starting to become hot again. So I think that's better than cold weather, better than rain. So that's the narrative. What the hell is the Fed doing, right? So Slugmeister says, I think that high inflation and combat against economic slowdown is what is moving the markets. Powell also said tariffs is a one-time problem. That is correct. So I would say the same thing. And Powell did mention that tariffs are just a one-time increase in the inflation. If you're wondering about the inflation, let's see. CPI inflation. So if you're wondering about that, this is for the UK. For the UK, see how bad it is in the UK? So pretty much every single year, they are holding the pound, they're losing 4% of the value. That's pretty high inflation. We had 8%, but 4%, and this is lower than 8%, but 4% is still pretty high. So imagine that every single year you're losing 4% of your savings. This is the US. See, it's above target, and this could be from the tariffs. But it's definitely in an uptrend, and it is above 2%, so inflation is high, definitely high. So to sum up, what happened yesterday? Well, Fed meeting, interest rate cut, same as the forecast, okay? So what we actually had was a 25 basis points cut, but it was hawkish. So hawkish Powell. Basically, cut came in as expected. And if the number comes in as expected, so if the number comes in the same as the forecast, which we can see here, that means basically that you need to watch what the hell is Powell saying or what are the future projections. The future projections, which I did some research on, also came in line with the forecast, right? And basically, in the end, it was Powell who was important. So it was Powell who mentioned that this cut It may be just a cut to kind of risk manage. He's not going to aggressively, or he doesn't think that aggressive rate cuts are needed. He said inflation is elevated. He said the jobs market may be deteriorating a little bit, but his tone of voice, and if you really analyze the things he was saying, is hawkish, meaning they're not going to aggressively cut rates. Everyone thought that they were going to cut rates aggressively. People were actually thinking they were going to cut by even 50 basis points. Okay, so people were thinking of some crazy high rate cuts, which in the end did not happen. Okay, this same hawkishness led to bullish DXY. Yes, that is correct. That is something also that I mentioned on the stream. Let me just delete this so that it doesn't stay there. See, DXY gained value on that information. DXY started to push to the upside, and we had an update yesterday. So this was the Fed meeting, and now today, Thursday, we actually are continuing with the bullishness. Guess what? A lot of positioning online, a lot of positioning from the retail was short the DXY. They thought the 96.4 level was going to break. They thought we were going to have crazy dovishness from Powell and the Fed. They thought we were going to have crazy rate cuts. None of that happened. That is how it goes in trading. When all of the retail folks are thinking one thing, usually the exact opposite happens. Okay. So yeah, basically usually the exact opposite thing happens than what the retail is thinking and doing. That's why 95% of retail traders lose. Just a fact. If you go through broker statements, if you go through prop firm statistics, 95 to maybe even 98% of retail traders are wrong. So you want to do the exact opposite of the retail. DXY going up. For this next segment, I want to go through the calendar a bit. I think it's very important. This week has been pretty busy. It is going to continue being busy. I think tomorrow we should have the Bank of Japan policy rate. So that should happen. But what we had is we had the Bank of Canada, which kept the rate the same. Not a lot of news when it comes to Bank of Canada. So not a lot of impact on the CAD. They cut rates. Yeah, I'm sorry. They cut interest rates. So from 2.75 to 2.5. Other than that, no massive news. I'm short on the CAD. So I'm in USD CAD long. I'm in Euro CAD buy. I'm looking to buy Aussie CAD. It is approaching my level. It's pretty close. I kind of wanted to hit the 20 MA on the daily chart. Okay, so if it does hit the 20 MA on the daily, I'll be pretty happy to get in. Aussie CAD is a nice setup to go long. Aussie is pretty strong. CAD is super shit. If you look at the swaps, you get paid swaps, you get positive swaps. So that is pretty cool. And if you guys didn't know, how you can also check for swaps is if you just go to your MetaTrader. I want to show you that right now. You're probably not going to see it because of the focus of the camera. But basically, if you go to, let's say, Euro GBP, and you go to the little information tab in your MetaTrader, you're going to see the swaps. And here, you're going to basically have swap long and swap short. No Siri, fucking Siri. So for swap long, it says to me, for every lot that I go long on Euro GBP, I'm paying 8 euros. And for every one lot that I go short, I'm receiving 1.5 euros. Okay? And it seems to me that Euro GBP is going up. What? Is that true? So I do have a trade on Euro GBP. Oh, okay, it's pumping higher a little bit. Good to see, but I don't know if anything substantial will happen out of that. So Aussie CAD, positive swaps, which is always nice. Let's see. Sentiment, what moves the market of observed, while smart money is buying the rumor and selling the news. That is correct. Sentiments and expectation. Real question is, can we beat the expectations or miss regardless of the actual number? So yeah, I think I understand what you're saying, and I like the part smart money is buying the rumor and selling the news, because that is exactly it. So smart money is actually probably out of their positions by the time the actual news comes out. So they're the ones buying before the news or selling before the news. They're the ones going in the beginning, and then we retail people, in most cases, if we don't know what we're doing, we get screwed over and we find ourselves on the opposite side of a trade. Okay, so we basically end up being liquidity for the bigger players. And that's a great example yesterday, because I'm sure a lot of folks went short here. I'm sure people went short on Monday and Tuesday, and they were looking for this. So what happened? Hawkish cut, and they got most likely crushed. So their stop losses most likely got crushed, and they're now probably panicking. If they're still in the trade, they're probably going to close their shorts soon. Okay. One more reason why I don't think the US dollar, just to touch on this subject, so one more reason why I don't think the dollar is going to crash much lower, because the dollar is a huge currency. It is the biggest currency in the world. So the United States is the biggest economy in the world. And you have to ask yourself, what created this huge downtrend for the dollar? What was the catalyst? Well, the catalyst was Trump kind of different political game, reorienting the United States, and that meant a lot of uncertainty. So Trump created a lot of uncertainty, and it motivated a lot of investors and hedge funds and pension funds and big players and whales to sell US dollars, to kind of reduce their exposure to the United States. So that was the catalyst for the beginning of 2025. Well, what would be the catalyst for this to go down? Currently, there isn't one. So the dollar is so big and so strong as a currency and used so much that you need a massive, massive catalyst to be bearish. Also, what is the favorite thing for every single investor in the world to do? It is to buy US stocks, right? Because they perform the best. The US stock market just has the best performance in the world. So in order to buy US stocks, what do you need to have? You need to have US dollars. And every single hedge fund, pension fund, whale, investor, portfolio manager needs to have US stocks in their portfolio. No matter if you're from European Union, if you're from the UK, if you're from, I don't know, Africa or any other country. No matter where you're from, you're gonna need to have US stocks. To buy US stocks, you need US dollars. So you first need to buy dollars, and then you need to buy stocks. Basically, the methodology is, or the logic is, as long as the stock market is exploding higher, as long as the stock market is running higher, as long as people keep buying stocks, the dollar is hard to go down. The dollar has a lot of strength to go up. As I mentioned, every single person in the world, if they want to buy US stocks, they first need to buy US dollars and then go and buy stocks. Okay, so that's the sort of methodology. That's the sort of path of money. That's the sort of flow where the money goes, and it's good to keep that in mind. The main takeaway would be, we had a catalyst for the sell-off, but we currently don't have a massive catalyst to sell off once again with this sort of massive movement. So my forecast for the dollar is actually neutral right now. It's not really bullish. I know we had some unemployment claims today. So yeah, USD unemployment claims forecast was 241. Actual number was 231, meaning lower than the forecast. That's good for the currency. How do I know? Well, you can see usual effect. Actual less than forecast is good for the currency, meaning good for the US dollar. That's why I love the Forex calendar, you get a explanation for absolutely everything. So if you want to learn the fundamentals, just opening up the Forex calendar every single day, once per day, makes it very, very easy to learn this stuff, okay? That's my DXY. And I think I have covered most of the central bank stuff. So I know I talked about Bank of Canada. We had also Bank of England today. Yeah, here. So we had the Bank of England. They kept the rates the same. There wasn't much talk of anything else. The reaction was, we can check out GBP USD, a bearish one. So, okay, that's pretty good. Here, the reaction was a pretty bearish one. I do have a Euro GBP buy. And yeah, from that as well, we had a nice pump to the upside from the Euro against the pound. But to be honest, I went through the event, I did some research, and there wasn't much data to look at. I'm not sure if there was even a press conference. I know there was a Bank of Canada press conference, but for the Bank of England, I didn't find anything, to be honest. You just had the summary, votes, and the bank rate. Okay, so yeah, it hasn't really changed from the last time. These are the votes. I'm not really sure how to read the votes. Does it matter for me as a big swing trader right now? No, it doesn't matter. What I do know is the two worst currencies right now is CAD and the pound. Okay. If you look at the economic data for the pound, I'm gonna quickly show you. GDP is all over the place, not looking the greatest. Unemployment rising. Inflation is pretty high. Check this out. Inflation is around 4%. 3.8% and rising. So inflation is in an uptrend, and that is pretty bad inflation, okay? So that is pretty bad inflation and not something that you want to see. That basically creates a stagflation environment for the pound. Stagflation. Stagflation is never good. You can ask ChatGPT for a better explanation, but stagflation lowers the demand for the currency, in this case the pound, and makes the value go down. Is there an index? Let's say GXY. No, because you have DXY, you have JXY, which is Japanese yen index. See, super flat alongside the DXY. But you don't have GXY, meaning you don't have the pound index. I'm very interested in buying the Aussie. Also take a look at 6A1 exclamation point. Aussie currency index. It broke weekly resistance. Let's see. So 6A1. Is it this one? Okay. Yeah, it looks, if this is it, it looks bullish. It definitely looks bullish. I'm not sure Australian dollar futures. Okay, so broke out. Here it's a currency index. Okay, I get it. Looks bullish. I like the Aussie. I think it's okay. So GBP Aussie shorts. Yeah, that could be a good idea. GBP AUD. I just look at swaps lately. I've been looking at swaps lately. Let's check out what would the swaps be. Let's see, GBP AUD. Okay, so the swaps would be not that bad. So you would get paid swaps if you buy, but the difference in the rates is not much. So let me also check on my MetaTrader. Let's take a look. So we talked about GBP AUD. Let's see. Swap long, or sorry, swap short is pretty high. Fuck. Okay. So it's pretty high on my MetaTrader. Here it's not a big difference, but yeah, could be pretty expensive if you go short. Pretty much your expense would be the same as buying Euro GBP. Okay. So let's get back to it. GBP AUD. Technical analysis actually looks all right. We broke out of a support level here. We are now kind of retesting the support level. So I like this. I like this price action, and I think it would be interesting to go short. Again, those swaps are bothering me a bit, but I don't think it's a bad trade idea. I think it's okay. My preferred currency to sell right now is the CAD. So again, I do still have a Euro GBP long. So getting in on a pound Aussie short would be a bit more exposure. So this is not for me, but if anyone is looking for a good sell entry, GBP Aussie is interesting. What you can do is you can pretty much get in at this break and retest right now. Put your stop loss around there. Maybe aim for... You have a lot of free room to aim. So your take profit can pretty much be somewhere around here, maybe like a 2-to-1. Or you can even trail your stop loss above the 20 EMA or above the swing highs. So whatever you prefer. Edge Finder top setups, let me just check that. GBP AUD. Let's see. So neutral. Okay, neutral on the Edge Finder, but it's okay. I like it. So yeah, thank you for the suggestion. I think that's good. Let's also take a look at the USD yen. I was considering some sell setups. I was considering to go short USD yen because you have to look at the interest rates. You have to look at the central banks. If you're a fundamental trader and you're trading currencies, you have to know what the central banks are doing. So the Fed right now is on a cutting cycle, while the BOJ is possibly going to hike rates. So if you go to BOJ interest rate, here, what do you see? They're hiking a bit. No, when was this? Okay, so they kind of raised it. Yeah, basically they are raising the rates. Okay, lately they have been a bit flat, but it is forecasted that the rates for the Japanese yen could go up to 1%. That is bullish. So cutting rates is bearish for the currency, raising rates is bullish for the currency. So what you have is Fed cutting rates, Bank of Japan raising rates. That should be bearish for USD yen. Looking at the chart, it just doesn't want to go down. So it did break a key level of support right here, and then immediately it got bought up. So there's a pesky buyer. There's a pesky buyer at this level of support. Every time we try to go into that level of support, we reject. Okay, we reject to the upside. And also one more concern I have about shorting USD yen is the crazy high swaps. Look at the swaps. USD JPY. Look at the difference. Massive difference. So you actually receive swaps if you buy. Basically, if you can buy this, range, or if you did buy this range, and if you have held for the last 45 days, you would be making some nice money. Let me check. Let's do a quick experiment. So let me open my MetaTrader. Let me go to USD JPY. Let me check on the swap. So swap long is 8 euros per lot. Okay. 8 euros per lot. So let's say I go long 0.05 lots. Somewhere on the bottom. Let's say I went long here. Let's say I put the stop loss below the support. We can do some calculations as well. Position size. Shit. Oh, no, go back. Okay. So let's suppose I am trading USD JPY. Let's suppose I have 10K in my account. Let's risk on 1% of capital. 145 is the stop loss. 145. 0.1 lots. Okay, that's okay. So let's say you executed this trade. You went long 0.1. 0.1 lots. So that means every single day, according to my MetaTrader, what did I say? Is it 8 euros? I think it was 8 euros. So let's see, USD JPY. Yeah, 8.6 euros. On one lot, you get paid 8.6 euros. That means on 0.1 lot, you get paid 0.86 euros per day. Okay? That's what you get paid as long as you keep holding this position in terms of swaps. So let's say you hold this for 60 days, 60 times 0.86 euros, around 51.6 euros. So you can basically achieve, a kind of 0.5 to 1 return if you hold a buy setup. So that's okay. I thought it was gonna be a bit more. These fucking brokers, man, they screw you every way possible. They first take your commission. They first take a commission. Then they screw you on the spreads. Then they skew the swaps. So even though you should be getting higher swaps, they place a commission in the swaps. And when you're paying negative swaps, they make them even bigger. So the brokers are the biggest crooks of them all, alongside prop firms. But hey, it is what it is. It is a rigged game kind of against you, but if you have a good trading edge, you can be one of the 5% of the profitable traders. You can actually make quite a lot of money with prop firms and just with trading in general. But just by looking at the numbers, I mean, they are really screwing you over left and right. So that was the quick experiment. Let me check the comments. Maybe swaps are so much, that's why you see the pesky buyers. Basically, yeah, that is true. That is definitely true. One thing you have to, that's a good observation. And one thing you have to note is all of the folks that are short on the dollar, all of the folks that are short on the USD yen, they are paying a lot of swaps. And imagine holding a sell position on this thing for 2 years. So imagine holding a sell position for 2 years as a big player, as a pension fund, as a hedge fund, as a portfolio manager, as an institution, as a big bank. You're gonna get skinned alive. Okay, every single year you're paying 4%, so you're losing 4% every single year. Why 4%? Because that's the interest rate. Okay, it's now 3.75, but it was around 4%. Okay, there was a cut recently. So you're losing this amount every single year. Imagine holding this for 2 to 3 years. That is also another reason why people don't want to short USD yen. Okay, because it's expensive. You need to pay for it. And they much prefer buying USD yen. And if we zoom out, what will we see? I never zoomed out on this chart. But yeah, basically from 2012 up to now, we have just been in a massive uptrend. So the folks that were collecting swaps every single year, collecting that juicy percentage, have just been buying USD yen. And then, of course, in 24 July, Bank of Japan started to raise interest rates. So the swap carry trade got messed up. I don't want to say fuck because I'm going to lose my monetization, but I think I already said it a couple of times. So we're good. So yeah, basically they got fucked over. All of the guys holding the carry trade in July. So this chart started to melt lower. Okay, this started to explode lower. Maybe we can follow up with that carry trade in the future. Right? Maybe we can follow up with that carry trade. So Slugmeister says, man, these brokers, I swear my entry on Dow yesterday didn't hit on bottom 45715 was my buy entry. Let me check it out. It's gonna depend on my my data source. So it's gonna depend on my data source if we do have the same data source. So what would you say? 45715. Ah, okay. So you basically got an order here. Yeah, it was a really volatile time. That's what they do. They don't tag you in when it suits them, but then when the stop loss needs to get hit, then they for sure tag you in. So there's a lot of shady stuff going on in the background, especially if you're not with a regulated broker. If you're with an unregulated broker, you're gonna get screwed over a lot. So I highly recommend you at least are with a regulated broker. And this would have been a nice trade if you managed to catch this bottom. If you got in, let's say here, and aimed for a 2-to-1 like this, that's a pretty healthy trade. So good trade idea. Congratulations on that. Didn't get filled, part of the game, but you should be happy that you had a nice trade idea. And next time you will most likely have better execution. You will most likely have a bit more luck. You got pretty unlucky. So next time you will make it. Okay. And pretty nice trade idea. You also have to know that 98% of brokers, or I would say even like 99% of brokers, B-book you. Okay. What does that mean? So they B-book your trades, meaning they are the ones standing on the other side of your trades. So there is A booking and there is B booking. A booking means taking your trades in the live markets. B booking means betting against you. So when you make money, a broker loses money. And when you lose money, the broker makes money. And the broker makes all of the money that you lost, right? Basically a casino. Exact same thing as a casino. In the casino, you come in with 100 euros, you bet 100 on black on the roulette table, you lose it. You lose all of it, casino gets all of it. In trading, you come in with 100 euros, you buy the US 30, you lose it all, and the broker B books you. That means the broker gets the 100 euros. Basically a casino, that's the game. It's a dirty one, but if you have a good edge, if you know what you're doing, you can make money. And I want to emphasize that because I know it seems like doom and gloom. Every time I talk about it, it seems very bad, and it is very bad, but there is a possibility for us to make money. There is sort of an opportunity as well. It's just that so many people lose money. It's like 95%. So yeah, that's tough. Okay. I think that's enough of the rant. Let me tell you what I have on the watch list. Let me tell you what I'm personally looking at. I already went through the watch list on the A1 streams, so I don't want to waste too much time. I don't want to just repeat myself. Let me spice it up a bit. Let me look at the crypto first. I haven't looked at crypto much. I do have an investment in Bitcoin and some Ethereum as well, but it seems flat. So crypto right now seems to be in this flat price action, range-bound period. It's not even following the NASDAQ. I mean, the NASDAQ is just exploding higher while crypto is just being corrective. Let me just turn off the AC because now it's too cold. For crypto, I don't have much. So I don't have a big idea. I don't want to buy, I don't want to sell. Also, if you look at I think it's the halving cycle for Bitcoin. If you look at the halving cycle, we are now in the period where Bitcoin loses value. So we already had 3 halving cycles before this one. And in all 3 halving cycles during this period, in this seasonality, Bitcoin lost value. That's an added reason why I don't want to look for buy trades on Bitcoin. Ethereum is a whole different beast. So Ethereum looks very overextended. Ethereum looks very overbought, in my opinion. You also had a lot of US companies investing into Ethereum, artificially inflating their stock price, because as the price of Ethereum kept going up, so did the value of their holdings, so did their stock price. And that's a dirty game as well, because those companies, most of those companies are not profitable. They don't have any products. They're not selling anything useful. They're losing money, but they're just buying crypto and artificially inflating their stock price. So yeah, that is pretty bad. I think that has come to an end. I think a lot of those companies lost value. I think Palantir is one of those companies, isn't it? I think it is. Had a sell-off in August. It looks similar to the Ethereum chart, doesn't it? I think it does, kind of. Or are they holding Bitcoin? I don't know. I'm going to have to brush up on that. Basically, Ethereum, I think there's likely a correction coming. We had a massive uptrend, massive explosion, massive momentum. So I think it's time for us to retrace a bit. Not that much, but to get a bit of a pullback. So Slugmeister says, how do I know that I'm ready for prop firm challenges? Well, I would say you can't rely on just backtesting. I know backtesting is super important, that is true, but live testing is so much more important. I was a big believer in just backtesting, but lately I've come to realize that live testing is where it's at. So live testing is the number one most important thing. So if you can write down how much live testing experience do you have, and did you journal your trades? If you haven't journaled, then you need to start journaling ASAP. I would say if you can make money in 3 to 6 months of live trading, live testing, and journaling, you are ready for a funded challenge. It's not easy. It's pretty hard. I can count the people that I personally know that have a track record of, let's say, a couple of months or a year and are actually profitable on my fingers. So there's like maybe 8 or 10 real traders that I personally know that are successful. So it's very hard to do it. But if you can do it, you will basically prove to yourself that you have the skills, you have the confidence, and I would then proceed with buying a challenge. Otherwise, I wouldn't waste my money at all. Okay. Otherwise, you're basically throwing away money into a challenge and wasting it. Yes, I did. I journaled my trades since last year and I've made good profits. I have my trading edge, but I find risk management tricky. Okay, so if you're comfortable to write down your statistics, you don't have to do it. But if you do want to, I can look through them. So if you can type the number of trades, the win rate, the return, and the average reward to risk, and that will help me to assess things a bit better. As far as risk management goes, if you're a swing trader, I recommend 1% for the challenge, and then 0.5% for the funded stage. Okay, 0.5% for the funded stage. That's what I personally recommend. If you're a scalper, it's gonna be different. You need to risk a lot less. You need to risk maybe like 0.25% for the challenge and maybe like 0.15% for the funded stage, because as a scalper, most likely you will be taking around, I don't know, 1 to 3 trades per day, right? So it very much depends if you're a swing trader, day trader, scalper. A little secret, I don't know of any scalper that makes money consistently with purely technical analysis and with a very let's say, basic trading edge. The only guys I know that are scalping and that are making money is basically THA guy from Darwinex. He trades central bank events and NFP. So he's taking a huge amount of positions right before or right after an event. And let's say SMB Capital. So SMB Capital, one of the most popular, most successful prop firms in the world. They are from New York. They have real traders. It's a real prop firm. They have real trading edges that they keep in-house. So those things they don't share on the internet unless I think you can pay like $5,000 and they will share with you their edge. But yeah, they're not going to talk about it publicly because their trading edge is so good. They know something that you don't. They know something that I don't know. And they have developed it through years and years and years of research and experience. So my minimum reward to risk is 1 to 3, risk to reward is 1 to 3, and the rest of my positions is trailing profits. I'm a swing trader. I take 1 to 3 trades in a busy week. I grow small accounts. My real edge comes from trailing stops on big moves, and I'm good with entries. Okay, so you're a swing trader. Well, if in the last, let's say 6 months to a year, so 6 to 12 months, if you have made more than 15% in returns with a drawdown that is not higher than 15%, so let's say a 15% return with 15% drawdown, I would say you are okay to start a funded challenge. If you have made less than 15 in the last 6 months, 6 to 12 months, and if your drawdown is far bigger, I would say you're not ready, okay? And those are kind of the statistics that I would like to see in a trader that starts a funded challenge. And making 15% in 6 to 12 months is hard. It's not easy. It also means you have beat the S&P 500, which is another thing that is very hard to do. Like 95% of hedge fund managers cannot beat the S&P. So that's kind of the benchmark. If you can make more than 15% per year, you're ready for a funded challenge. Okay. Of course, if your drawdown is massive, if your drawdown is like 30%, 20 to 30%, you're gonna blow a lot of challenge accounts before succeeding. Hey David, what's up? So I would say that is the percentage you should aim. If you already have those statistics, if you already have those results, I would try out the funded challenge. Okay, how much would I risk? Again, you said you were a swing trader. I would risk 1% on the challenge phase, and I would risk 0.5% on the funded stage. I think that is pretty good. It's not too conservative, it's not too aggressive, it's in the middle. And that is exactly what I'm doing for my personal challenges, and I've just started a new challenge for ChatGPT. So I'm using trade signals from ChatGPT and I'm putting them into a funded challenge. And yeah, basically trading that. Let's see, I have 2 trades open. I can show it to you guys. So first one is a sell on the S&P. It's around break even. And the second position is it's a sell on Euro GBP, which is doing badly now. So yeah, currently not doing well. I will continue to test, so we will see. My drawdowns are pretty controlled, to be honest. Can I share my strategy on the technical side? Well, if you want to, you can write down a couple of bullet points for sure. But I would say the key is, if you can't yet make 15% in 12 months, it's not smart to start a funded challenge. Think about it. Most challenges, you need to make 10% for phase 1, 5% for phase 2, with a maximum drawdown of 10%. So that means you're gonna need a year to pass phase 1 and pass phase 2, probably even longer than that. And if you can't make 15% in a year, then it's gonna take even longer. So, I would probably I would first aim to develop my edge to a point where I can make 15% per year, and then I would start a funded challenge. So hope that helps. I had made more than 15% last year. Okay, great, awesome. If you want, you can write down a couple of bullet points. If you have made more than 15% last year, if your drawdown is not higher than 15, I would do it. I would personally try out the funded challenge. You don't have to go crazy with the 100K. You can start with 25 or 50K challenge. It's not a lot of money. So yeah, I would try it out. If you do want to try out the funded challenge, you can check out DNA Funded. You can get 25% off with the code A1Live. Okay, so I know you're from the Trader Nick stream. So yeah, if you want to check out DNA Funded, A1Live gets you 25% off. For this last segment of the stream, I have a couple of more minutes before I need to go. I'm going to run through my watch list. So what am I watching for today? NASDAQ, I'm really bullish, but I cannot seem to catch I cannot seem to catch the price. So I'm looking for pullbacks. I've been looking for pullbacks for quite a long time. I've been looking for pullbacks ever since, I think it was May or June. Ever since here. We just never got a significant enough pullback for me to get in. We are having this sort of sideways up movement where you have sideways up, sideways up. That's hard to get in because the pullbacks are minimal. So I would like to first see a bit more of a significant pullback and then I would get in. What am I afraid of? I'm afraid of that this is just gonna keep exploding without me. Okay, so that is what I am a bit afraid of, that we're gonna see an explosion in the NASDAQ, and I'm just not gonna be able to get in. We will see. I have an alert set. Gold and silver are my two favorite. Let me just check the 10-year yield. 10-year is actually going up quite significantly. Okay, but gold and silver. And TLT, what is TLT doing? That is the price of, TLT is crashing a bit. That is the price of the 20 plus year treasury bond. Yeah, as I mentioned, gold and silver, two favorite things to buy right now. I think we can pull back. I think a pullback will happen. I'm looking to buy silver potentially at this level of support as the first entry. Maybe get in a second one right there. So two support levels, two entry points. I think that would be pretty healthy. So that's the game plan. Why am I so bullish on the metals? Inflation is super high in the United States. So inflation is above target. You have NFP, which is falling. So the jobs data is deteriorating. You have rate cuts in the future, which should be bearish for the dollar, thus bullish for the gold and silver. You have printing of money, increased printing of money from US commercial banks. You have Trump's big beautiful bill. Okay. Can I send you my trades and strategy on DM on Discord? For sure, you can do it. If you're in the A1 Discord, it's gonna be pretty easy to find my Discord handle, but if you want to find me, if you're not in the A1 Discord, you can go to Zentum Trading. It's in the link in the description. You can join the free Discord here, and you can find my handle on there. So you can find my account on there. Just send me a DM, and once I get some time. Okay, so you're in the A1 Discord Gold VIP group. Great. So it's gonna be pretty easy to find me there. Yeah, I'm gonna check it out. So silver and gold, I mentioned Trump's big beautiful bill, increased spending, inflation goes up. So pretty much I'm looking at every single scenario, I'm looking at every single confluence, and all of it is pointing to an upside in gold and silver. So for gold, I'm looking at this level of support, 3,500. So I'm looking at 3,500 to buy. Okay, that's gonna be a nice crucial level for me to buy. I think we can hit it. I think we can go back. I think we can pull back. I think we are a bit overextended. Yeah, no worries, Slugmeister. So thank you for all of the comments, and yeah, send the statistics. And I will see you if you're gonna join for the next 10 minutes, then great. But if you have to go, I will see you in the next stream. So I'll stream for, I think, like 8 or 9 more minutes. I'll basically just go through my watch list. Gold, looking for this support level, and then I'm gonna buy, basically. So then I will try to get in on a buy setup. Rest of the stuff, what I have is, I had a euro-dollar trade. So I did talk about this on the A1 stream, but for my personal viewers, just so you know what is happening, I'm out of this trade. So also, all of these updates, you can get them in my Zentum Trading Discord, which you can join by going to Zentum Trading. So you can get it both in the A1 Discord from Trader Nick, and I'm talking about these trades. I'm not giving you signals, but I'm talking about them and doing analysis in our Zentum Trading Discord. So you can join for free, and you can get my forecasts, my daily forecasts, for free. Okay, euro dollar, I'm out. Now, I did have a question. What do I think? Am I bullish? Am I bearish? Let me check the top setups. Euro USD. Neutral. I think we can go up a bit more. So I wanted to get out, so I didn't want to remain in this trade, but I think we can hit 1.22. I think that's a level we can achieve. But I don't have a lot of confidence, so that's why I preferred to get out of my position while it's still moving higher and maybe reassess, maybe get back in a bit later. Right now, I don't want to short on the US dollar. I don't think that is the smartest thing to do. So going short on the US dollar, I think that would be kind of problematic. So there's better things out there. For example, going short on the CAD, which I'm doing by being in USD CAD. So I have bought USD against the CAD, Euro CAD, I've bought Euro CAD, and I'm looking to buy Aussie CAD. So if it hits this level, if Aussie CAD hits this level of support, it already kind of did hit the swing high, but if it goes down a bit more, hits the dynamic support level, which is the 20 MA, I'll be pretty happy to get in. I'll be pretty happy to execute a buy position for the Aussie CAD. So that is my game plan. Aussie CAD buy. I want to get as much exposure to selling the CAD as I can. I'm also aware of the swaps. Swaps can get pretty expensive. So by buying Aussie CAD, I'm collecting positive swaps, I believe. Let's see, carry trade. The CAD. Yeah, see, collecting swaps. But if I'm buying USD CAD, I'm also collecting positive swaps. See, positive swaps. For my Euro CAD position, I'm gonna need to pay swaps. Not a lot, but I'm gonna be losing on the swaps game. So again, I'm already long USD CAD, long Euro CAD. I wanna get in Aussie CAD. I wanna buy it. And it's in an uptrend, looks pretty healthy. Aussie right now is a pretty strong currency. So just a quick summary, I did this on the A1 stream. I can show you that as well. What is my current opinion? Let's see. Where is it? Where is it? Where is it? Where is it? Top setups. No, it's not the top setups. I'm looking for heat maps. This. On the dollar, I'm neutral. Pound, I'm really bearish on. all of the long-term data is really bad. On the euro, I'm bullish. I think Europe is doing okay. On the yen, I'm neutral. If they raise interest rates, I'm gonna be bullish. New Zealand, I don't know. CAD, I'm very bearish on. Two of my favorite things to sell right now is the CAD and the pound. Aussie, I'm bullish on. I like the Aussie. Both short-term, this is short-term performance, and long-term, if you look at the numbers, Aussie has been performing pretty well, I would say. So we're getting some pretty healthy data overall, and for the Swiss, I haven't done enough research. So Aussie CAD, buying the Aussie, selling the CAD, positive swaps, what's not to like? I like this a lot. Aussie CAD is a solid setup, both technical and fundamental. Yes, I would definitely agree with you. I think it's a pretty good setup, and it's gonna be most likely gonna be my next trade, since it is pretty closely approaching the 20 MA. Okay. I do have Euro GBP long. This trade has been running from 11th of August. So it has been running for quite a long time, and I'm still in. I'm not planning to manually close it. We are now pushing up a little bit. I have a take profit set, so if we do hit the take profit, I will be out of this trade. It's right here on the top. I think we can reach it, although I thought the reaction was gonna be quicker. So I thought we were gonna have a nice explosion to the upside. We didn't have it. So we didn't get that, unfortunately. We just got a super flat, super corrective range. So not the sort of reaction I was looking for, but if I can get out for a profit, if this can hit my take profit, I'll be happy. Also, I paid quite a lot of swaps right now. So I have already paid quite a lot of swaps. And the longer I keep holding this trade, how long have I been holding it? For like 43 days. So the longer I keep holding it, the more swaps I need to pay. So yeah, I no longer like this position as much as I did. Hopefully it hits the take profit. If it goes to the stop loss, it is what it is. So that's about it for my watch list. We went through everything. Is there anything else that is super interesting? Nikkei is pretty bullish. Nikkei is exploding higher for some reason. I'm not sure why. I'm not really proficient in the Nikkei. The DAX is just looking flat and corrective. So the DAX I'm not touching. I already took 2 losses on the DAX. So I don't want to take a third one. If I'm going to be looking at the DAX, I'm going to be looking for a breakout of this level of resistance. Okay. So until it breaks, I'll be patient. So that's about it. I don't have anything else that is smart to say. If you wanna check out Zentum Trading, go and click the link in the description of the stream. You can join our Discord for free. You can get my daily market forecasts for absolutely free. If you want to become a paid member, get access to the full trading course, you can do so as well. If you want to get updates of when I will be live streaming, make sure to follow me on Instagram. My handle is @MarcosTradingJourney. Okay, that is my Instagram handle. It is also in the description of the video. It should be. So I post all of the updates when I will be streaming on my Instagram stories. Thank you guys very much for watching. Thank you for all of the comments, and I will see you probably next week next week Thursday I'm traveling. So next week probably there won't be any stream. So we will skip next week, but I will be back on what would be the date? I will be back on the 2nd. Yeah, 2nd of October I should be back. So that's it. Thank you. See you guys in the next stream, and good luck in the markets.